What's up, everybody? My name is Brad. I'm with Wooten CPA, and I'm here to bring peace to your finance and tax responsibilities. Today, I'm talking to those of you who are self-employed, independent contractors, running your own sole proprietor business. And we're talking about your options right now under the current economic conditions and the strain that you might be facing due to those conditions. Now, real quick, I have a lot of clients who are missionaries and pastors, and they're considered self-employed, and they know that in terms of their Social Security and Medicare, because they're not in FICA, they're in SICA. This does not apply to you. So I just want to be clear. If you're a self-employed pastor or missionary, that is not the term that we are using here for self-employed. We're using sole proprietor or self-employed person who is running a business. So we're talking Schedule C on your tax return. So now that we have that out of the way, let's talk real quick about what your options are. We're going to go through the stimulus or recovery rebate. We're going to go through the economic injury disaster loan, the EIDL. We're going to go through the Paycheck Protection Program loan, the PPP, and we're going to go through unemployment options. Now, I have this confidence meter up here. Today is April 6, 2020. It's Monday, and we're going to go with what we know now. Now, the good news is the SBA has come out with their interim final rule. I know that's a weird name. We'll get into that as well. But we're going to go through what they've issued. So we've gotten a lot more clarity here as it applies to the options for self-employed businesses. Now, I've got my confidence meter over here. I'd say that's at a 7 or an 8. And that is because, like I said, we've got a lot more clarity than what we had 2-3 days ago, a week ago for sure. And that confidence has moved over towards 10 quite a bit. Now, there are some elements of this where the confidence is much lower than that, and I'm going to draw those out. I'm going to point those out and be very clear about where the confidence meter is less than that, but we're going to stick it right there as far as the topic as a whole goes. So we're going to run through this so that you as a self-employed individual running your own business knows what your options are so that you can make good decisions and move forward. The stimulus recovery rebate. This is the stimulus checks you've heard about. They're actually called recovery rebates in the law itself. We've gotten a lot of clarity about this, and we pretty much, I'd say we're at 90 to 100% confidence on how this is going to operate. And I have a separate video for the stimulus payments, the recovery rebates, that walks through everything that we know right now, who's going to get it, what you need to do, if you have to pay it back or not, what's going to happen when you file your 2020 tax return. And so I answer kind of any question you might need about that in another video. I'll try to put the link up right here to that video so you can jump over and watch it. I'll put it in the description below as well. So this applies to pretty much everyone almost. And so if you're a self-employed individual, you can count on getting some payment here. Now, the economic injury disaster loan. This loan is an SBA, a Small Business Administration loan, and these loans have been around for a long time. These were not created by the CARES Act. They were not created by any new legislation as a result of our current disaster status that we have in the country right now. However, there were some tweaks to this. So again, like I said, this is an SBA loan. The loan amount can be up to $2 million. The terms here, the percentage is anywhere from 3.25% or 2.75 up to 4.5%. I think last I saw it's supposed to be around 3.25%. It can be up to a 30-year loan, and you can apply for this at SBA.gov on the SBA website. Now, the elements that were tweaked for this are you can apply for this loan and you can actually request an immediate $10,000 advance of this loan, which turns into a grant and is forgiven. So the loan's forgiven, which means it turns into a grant, and therefore you don't have to pay it back. That's $10,000 portion of whatever you take out. Now, this particular loan, again, you have to qualify as part of a disaster, which everyone does right now. And so you go onto the SBA website, check a few boxes, you certify what you need the money for. The second page is going to ask for gross receipts, going to ask for some financial data there, and you can apply for however much you need. Now, this is a typical loan. You have to qualify for this loan, so they're going to check your finances, they're going to make sure you can pay it back, and they're going to qualify you as a typical loan. Now, one thing you could do is, you could just apply for the $10,000 amount, get that as an advance, and then it's forgiven as a grant. And so you could just get that amount. But if you need more than that, and if you end up needing more than what we can calculate over here under the PPL, this is going to be a good route to go. Let's go with the Paycheck Protection Program loan, the PPP. This was created by the CARES Act. It's been all over the news. It's probably what you've heard the most about. And it can be forgiven in full if it's spent on qualified expenses. One of the things that gave us a lot more clarity on this is this interim final rule. Like I mentioned, that is a weird name, interim final. Those two things don't mean the same thing. But if you read the rule itself as put out by the SBA, who is administering these loans, they're not administering them, sorry, you have to go to your bank to get the loan, but they're backed by the SBA, and they're the ones coming out with some of the guidance about these loans. And so their interim final rule mentions typically there is a waiting period, there's a comment period when they issue these rules, but they were able to waive those periods. So this actually is pretty much the final rule as it relates to the PPP loan program. So what exactly do we need to do for these PPP loans? There's two different calculations. There's a loan calculation for the amount of loan you can get. There's also a calculation for the amount of loan that can be forgiven. Now, this is where our confidence meter is going to drop back down to maybe a 5. All right, this could go 50-50, and that is on the loan calculation as well as the loan forgiveness calculation. So in order to calculate the amount of loan, the amount that you can borrow, it is basically a year's worth of payroll cost divided by 12 to get the monthly average, and then multiplied times 2.5. So if it was $120,000 of payroll cost divided by 12 would be $10,000 times 2.5 would be $25,000. That would be a sample of how this calculation could work. But what is not super clear is what are payroll costs for a self-employed, for a sole proprietor, for a 1099 contractor. So they did give some clarification here, but again, it's not super clear. They said that it's basically wage, commissions, income, or net earnings from self-employment. Now, these things could mean something different. Wage, commissions, that could be your gross receipts on your Schedule C of your tax return. So get your last filed tax return, go to Schedule C, look at your gross receipts. That could be your wage, commissions, or income for a self-employed individual. Now, net earnings from self-employment, does that mean net profit? Does that mean the amount at the bottom of your Schedule C, which is the net profit that you're actually charged self-employment taxes on? Or does it mean net earnings as far as the net gross? Now, I know that sounds weird too, but you can have a net gross in a sense of, say you're taking credit card payments and then there's a credit card fee. So the net earnings would be your gross income minus the credit card fee would be your net earnings before any other business expenses. Doesn't mean that amount. I still haven't seen any indication that any other CPA or any other attorney or anyone giving guidance on this actually knows what number they're going to use there. My recommendation would be you take your Schedule C if you've had a filed tax return since your business has been in place, and you go with that gross amount. Now, if the bank tells you got to go with the net amount, that's fine, but let's start with that gross amount. That's what I think you should try to go get. Now, you have to have been in operation prior to February 15, 2020, which pretty much means unless you started in January or early February of this year, you will have some kind of earnings from 2018, in which case you would have a Schedule C on your sorry, I think I said 2018, I meant 2019. You would have some earnings from 2019, in which case you would have a Schedule C on your last filed tax return if you have filed 2019. So Schedule C, they're going to want to see 1099. So these are 1099 miscellaneous that you have received from another business who has paid you. Now, there's a lot of self-employed people who don't receive 1099s. Like, for instance, I don't receive a 1099 because I'm serving individuals mostly, and so individuals don't have to give me a 1099 because they're not in business. And now the credit card merchant company that I use will issue a 1099K, so that's one 1099 that you might have showing income that you received. You also have 1099 miscellaneouses from other businesses that you've worked for showing income there. The next best step, I would think, it doesn't mention this in the rules, but a Schedule C from a filed tax return, because that's what you've claimed as income to the IRS. The bank is going to rely on that. And beyond these two things, for instance, if you started 1/1 of 2020, you're not going to have either of those things yet. So you're going to need a profit and loss, an income and expense statement to verify this. Now, one of the key things here is the banks do not have to verify. And that just means that, it's not an opportunity for you to game the system or to come up with some scheme. It's an opportunity for you to be honest, but the banks don't need to verify this when you're applying or when you're having the loan forgiveness application, because they know that there's not really a way for you necessarily to verify this. Another option would be bank statements. Bank statements are going to show income deposited. They're going to show expenses paid out. So you have your business account bank statements in order to calculate what your gross income is for the purposes of calculating the loan. And then you're also, so loan forgiveness, it gets a little bit trickier actually under the loan forgiveness, and that's really confidence is going to go down to 5 or even lower, because what are we going to forgive for a self-employed person? Now, what is forgiven is an 8 weeks, so there's an 8-week period of where you spend this loan on rent, utilities, health insurance for your employees, which I guess would mean the self-employed person, or retirement IRA matches for employees, which would mean the self-employed person here, and the payroll during the 8 weeks after your loan is approved. So what are we going to forgive? Well, rent and utilities is pretty easy. But what are we going to forgive in terms of payroll? Well, that's a hard one, because is it going to be the net amount you actually give to yourself from the loan? Or is it going to be an average of the last 12 months of your net earnings that you base the loan on? This is really hard because typically with employees, you're just going to take what you actually paid the employee. But with self-employment, well, you have the ability to take draws however much you want. And if you're getting this loan because your income has dropped, well, we can't use the income that came in as the payroll amount, because the whole point of getting the loan is the fact that you don't have any income coming in. So it's really hard to know what they're going to forgive. But don't let that stop you. If you need this money, use your Schedule C, your 1099s, your P&L, or your bank statements to show the gross income and potentially some kind of net earnings if that's what the bank's going to require in order to get the loan if you need it. And then, they'll give more guidance by the time the application to actually forgive these loans come out, and we'll have a little bit more clarity on what to calculate. But just know there'll be something that will be forgiven potentially under this calculation for what you actually got the loan for. It will potentially be 100% of that loan that is forgiven. Now, the loan terms, it's 1% interest for 2 years. You can defer payment for 6 months, so that means there's no payments due for the first 6 months, and you can apply for forgiveness after 8 weeks. So it's possible you'll never make a payment on this loan. It's very, very likely, actually, you'll never make a payment on this loan. Now, this defers payments, but it does not defer interest, and the forgiveness is of principal only. So you will owe some interest, even if 100% of this loan is forgiven, but at 1% per year, it's going to be very low. 25% or less is what can be spent for non-payroll. So we just talked about, we don't know exactly what's going to be payroll, but it's probably going to be somewhere close to whatever this net earnings amount is for a self-employed individual, which basically means if your loan is $10,000, you cannot spend more than $2,500 of it on rent, utilities, IRA matching, and health insurance. So again, for self-employed, we're talking mostly rent and utilities here. You can't spend more than 25% on those things. Otherwise, the loan can't be forgiven in that sense for those items. And you're not in agreement with what the loan terms are. So that, in a quick nutshell, is the PPP, the Paycheck Protection Program loan, and under the interim final rule that we finally got late last week from the SBA. Now, number 4, unemployment. Now, you might be fully aware that unemployment typically is not available to self-employed individuals. the CARES Act made it available to self-employed individuals. So if you have self-employment business, you can now apply. If your business has closed and you cannot operate it, you can apply for unemployment. If your income is down, you can apply for unemployment. Now, this was mandated by the federal government in the CARES Act, but it seems like, again, my confidence level here is going back down to a 6 or a 5. It seems like the states, so here in Florida unemployment office is going to administer this. That's who you're going to be applying through, is your state unemployment office. Florida's says that you can't apply yet if you're self-employed. Lots of states are not ready for self-employed individuals to start applying for unemployment. That, in my opinion, is just horrible, because if you're already out of work, you need this immediately. You know you qualify for it, but the states just aren't ready because their systems aren't set up to accept those applications. Now, this is $600 per week from the federal government. If the states have kind of added unemployment like the federal government has to self-employed individuals, because like I said, typically self-employed individuals are not covered, but if the states have added that too, there could be an additional amount that you could qualify for. But this is basically going to be at least $600 per week. Now, how do these things work together? Okay, you can apply for the EIDL and the PPP at the same time. Now, for typical business with employees, you cannot spend the EIDL on payroll and also the PPP on payroll. Basically, the EIDL would have to be for other expenses, and the PPP would have to be for payroll. If you start spending the EIDL on payroll, they're going to subtract that out of the amount you can have forgiven from the PPP. Now, what does that mean for self-employed individual? Well, again, we don't exactly know what payroll is, but that means that you could get this EIDL and pay rent with it, utilities. You could consolidate some other debt that you might have out there. You can pay for, if you're in a retail self-employed business, now you need to look at probably incorporating or doing an LLC or something, but you could have your cost purchasing, if you're purchasing material or items, then you could use this money for that. You don't want to use it for any kind of payroll cost, which is going to be your net earnings, what you're living on as a self-employed person, paying yourself from your business. So those two can be used in conjunction with each other. We covered the stimulus recovery rebate. You're going to get that no matter what, as long as you qualify for it on its own, but it doesn't interact with these other things. How does unemployment factor into this? Now, the EIDL, I just said, you're going to apply for that for any other type of expenses, not necessarily your income. So I think, confidence meter going back down to a 5, but I think you can get the EIDL and file for unemployment, as long as you don't pay yourself from the EIDL, but you pay just business expenses such as rent or debt payments, mortgage, credit cards, pay credit cards off, whatever you've got there on the EIDL that's not payroll or payment to yourself. I think you could get these two together. The Paycheck Protection Program loan, the whole purpose of that is to keep you getting paid. And if it was a company who had applied for the Paycheck Protection loan, basically they would continue to pay their employees. Therefore, their employees would not qualify for unemployment because they're still being paid by their company that got this loan to be able to pay them and keep them on payroll and not have to lay them off. Therefore, if you get the PPP loan as a self-employed person, the point is to keep your net earnings flowing to you as if you're still employed as a self-employed person, still running your business. Therefore, I don't think you're going to qualify for unemployment if you get the PPP loan. Banks are looking at this very closely because, again, they're giving you the loan, and a portion of it's going to be forgiven, but let's say some of it's not forgiven. Well, that loan remains a loan on the bank's books, and they want to lend it out at much more than 1% interest rate. And so they are actually qualifying these. They're not just blanket approving them across the board, but they are kind of verifying and deciding which loans they want to take on. So it's possible the bank would deny you this loan even if you qualify for it under the federal law. Another thing that I've heard is if you don't have a good relationship with the bank, there's plenty of banks that are not doing these loans, even though they can. They can give these loans to anyone, even if they don't have a banking relationship with you already. But there's plenty of people that I've heard from already who said that if they don't have a credit card with certain banks, then they're not doing it. If they don't already have a business account with certain banks, then they're not going to give these loans out to those individuals. And so you want to start with a bank that you have a relationship with. Now, if that particular bank is giving you trouble, then you're going to have to start searching for some other banks that are friendly to self-employed individuals when it comes to these loans. There's going to be some out there. We just don't know where they are yet. You're going to have to start searching for them. There could be some people already posting some of those resources. There is a limit of $100,000. $100,000. You can't apply for the PPP for any employee making $100,000 or more. How does that apply to self-employed individuals? Not 100% sure. Does it mean that a self-employed individual who is above $100,000 is out completely? Or does it just mean that a self-employed individual who might make $120,000 only qualifies at the $100,000 level, and then they divide by 12, multiply times 2.5 at $100,000, but can't go above that? Or does it mean, like I said, that they're completely out because they make more than 100? I haven't seen anything that's giving clarity on that either. We should get some more clarity on that soon. These loans, you can apply anytime between now and June 30th for the PPP. Like I said, this one goes on. It's a program that's kind of been around, but there's a limit. Basically, 1 million people can get this $10,000 before it's gone. And that's not just for self-employed individuals. So that's going to go very fast. This one has some $300 to $400 billion under it, but it's going to go quick too, because it's for any employee. It's for any company that has 500 or less employees, plus self-employed individuals. So this one's going to go quick too. So you have between now and June 30th to apply for this PPP loan, but you want to go ahead and get in line. So even though we don't have clarity around this completely yet over what I talked about as far as how it's calculated, how the forgiveness is calculated, you're going to want to evaluate, is this going to be enough for me? Am I still operating my business? Is that going to be enough? Do I want to do the EIDL because I have plenty of other things? Maybe I can consolidate some debt here, or I have other payments I want to do. Whatever your self-employment income divided by 12 times 2.5 is going to come out less than $10,000. You might as well go for this one because you can get more money and the full amount will be forgiven if you get it as that advance. And so, do I need the PPP loan? Do I need to file unemployment because none of these are really going to work for me? So those are decisions you got to make. I hope that I've given you a decent amount of information here. Leave questions, comments down below. Don't forget to subscribe because I'm going to continue to put out videos as we get more clarity on this for self-employed. Check out the other videos because, like I said, I've got one on the stimulus payment. I've got one related to some other things that have just been changing rapidly right now. And so continue to check those videos out. Subscribe so that you get notified as soon as a new video comes out because I'm trying to get them out as fast as I possibly can. Don't forget to comment, leave questions, ask me for other things so I know what to follow up on if this wasn't clear or if you need additional information. Thanks.